Hi, fellow traders. I'm back after a small hiatus. I had to take a couple of days off from trying to do videos. Yeah, I tried to do one Thursday. I tried to do one Friday, but my allergies were in full effect, and I couldn't get through a couple of minutes without hacking and coughing, and I can't record all that stuff. Nobody wants to hear all that. So, took some time to get better. On the back side of things now, I still have a little drainage, but it happens every year at the same time. When a certain pollen starts dropping, it hits me. I'm allergic to a lot of things in the South, which is crazy because I live here, but dealt with it all my life. So it's really no big deal to me. But glad to be back. I hope you guys had a great weekend. I hope you're off to a little bit better start than me. The last couple of days have been self-inflicted challenges. We'll talk about that here in a minute. But the big question really has been, okay, what's making the market do what it's doing? Why is the market trading crazy? Why is it all over the place? And everybody has their opinion. And, I don't know whether my opinion is right or not, but I think it's inflation. I think a lot of the inexperienced traders in the market are worried about inflation because people are talking about it. And I know all of you guys know what inflation is. You know that basically as inflation rises, the value of your dollar decreases, which is another reason why people think Bitcoin is the best thing since sliced bread. But that's another story for another day. But what happens is the purchasing power of your dollar decreases, which in turn leads to the increases of the prices of goods and services. And it gradually goes up over a period of time. And if your income doesn't keep up with the rate of inflation, then you tend to start not being able to afford certain things that you were able to in the past. And your quality of life tends to suffer a little bit. So just think of it. Now, I'm sure most of you guys have gotten gas in the last day or two. Gas prices, it may not have gone up everywhere, but every place that I've seen, the gas prices has gone up. And the reason being, the demand has gone up. You have more people traveling now. Spring break is popping up for different schools in different states. So people are buying more gas. So the response is to raise price. The demand is higher. Let's raise the price. When you go to the grocery store, you may start to see prices increase because the demand is higher. So it's that's just what happens, and people start to get scared. President Reagan back in the day had a really good quote about inflation. He said, inflation is as violent as a mugger, as frightening as an armed robber, and as deadly as a hitman. So that if you think about it, that's kind of scary. Okay, but the bottom line is, in a certain instance, I believe we are protected. The Federal Reserve, they're the ones that uses their monetary policy and everything to help manage inflation. They're going to let it get to a certain percentage, and that's it. and it's still going to be lower than it was, before all of this stuff started. Um, and yeah, I think the market and the Fed kind of don't mesh on some things, which is why, um, the market is maybe reacting a little bit more than it should be. But I think the most powerful way, we can protect ourselves. Obviously, to protect ourselves from the effects of inflation is to make more money. Some jobs, like when I was teaching, every year we would get a step increase, which basically was supposed to be a cost of living increase. And sometimes that increase was higher than what the cost of living increase was, and you do better. So if you have a job that you get a specific raise every year and you get that increase, as long as it is beating the inflation gain, you're going to be fine. Inflation to you is irrelevant. Now, yeah, you'll pay more, but you'll have the money to pay it. Those people whose salary is not keeping up with inflation will have to start cutting back on things. Again, their quality of life and all that stuff's going to change. So the most powerful way to protect yourself from inflation is to increase your earnings ability and your income. And I can't think of a better way to do it than, short-term trading in the stock market. Now, yeah, inflation may affect long-term investments more so than the short-term ones. We're trading the short-term volatility, and we can do that. And we can add money to our account, build our account up over time. We can do that. Or, you could safely put your money in some other type of investments that could help you out. But the main thing is, you can protect yourself. And you can actually come out better on the other end. So I think, this is just my personal opinion again, I think everybody's overreacting, or you have a group of people who are overreacting because people are crying wolf. They say, oh man, we got to get right, inflation's coming. We're starting to see prices go up now. We got this last stimulus. A lot of economists are saying that this stimulus is going to bring on inflation a little bit quicker. But it's a good thing. It means that our economy is getting stronger, it's getting healthier. And as long as we keep up with it, we're going to be fine. But this chart just kind of gives you an idea of what the cost of inflation are and how it affects people. When people start to feel it, if they're not aware and understand 100% what inflation means, they can get scared, especially if their income is not keeping up. So as far as the market, you have uncertainty and you have less people investing long term in the market. But again, we can trade that short term volatility and we can make money from it. You just have to learn what to do, how to do it. You just can't come in and throw money in the market like throwing darts at a board and think it's going to stick. It just doesn't work that way. But if you get with the financial advisor if you want to go that route, or you can learn for yourself and manage your own. You see a decline in competitiveness. Competition is what keeps the prices down. So you're going to see some people that will fold up, and like I said, they'll overreact, they'll fold up. You have less competition, prices go up. the money you have in the bank is probably going to lose value faster than the interest rates for just having money in the bank. That's why, I like to have my money working for me, versus just sitting in the bank. You start to see food cost more. Just a lot of things that kind of makes people uneasy. But just know, inflation is not all bad. It means that our economy is getting stronger. It's growing. We're starting to recover. So, yeah, when things were bad and we still had money, we should have been saving it or still making it work for us. But that's my 2 cents on it. All right, so first trade today. No, this wasn't the first trade. This was the second trade. I'll look at the first trade in a minute. This was definitely a product of me messing up the first trade. Okay? This trade started to work. I was a little bit late getting in. Okay? Because I was flipping. I was in another stock. I was a little bit late getting in, but I was still within the window. And almost made it to my first profit target. Came close. It bounced. And I got frustrated. It bounced. It started to sell off. And then it started getting bought back up. And so I just took it off. And it turned around and came back. It did hit my first target, but it just would have been a base hit anyway. And, that would have been the end of it. The trades to the long side on this, to me, did not set well because you guys that trade with me, I use the 60-minute chart. We've gone over that in detail. What's important on the 60-minute chart and how to determine if there's room to make money. And I told you guys, I had a couple people ask me about SQ, posted, and I told you I would not trade SQ because there's just too much above it. And you can see it just couldn't go. It was clear as day on the 60-minute chart. But so again, I think I could have taken profit here, and I got the sense to do it, but I lost on the first trade, and I was like, I'm not gonna do that. I'm gonna wait for it to come so I can get the maximum amount. That's what happens when you lose on the first trade, and especially it's a loss that was brought on by your incompetence. And yeah, I'm saying it was my incompetence. We're gonna look at it here in a second. But instead of me taking profit because I was reading the price action and it told me, hey, this is probably where you want to scale out or take some off the table, I didn't. I was like, no, I'm just going to wait for it to come back and hit this price so I can grab it. It was 221.75 is what I was looking for. And it didn't come back. And so it caused me to take this off here because I said in my mind, I lost. I had a max loss on the first trade. I'm not going to take a max loss on this trade. And, it caused me to do this. So that was SQ. Now, Facebook, this is the one that I traded pretty much all day, because this is the stock that had the most profit potential. Even short. There was a level 285.20 something that I was looking for. Over 2 points, I could have taken profit, made money on this trade to the short side. To the long side, we were in between this 291.78 level and this 297.37. So we had plenty of room, and we were above all of the moving averages. This was a beautiful chart to the long side, but it started setting up short. It got me in, and then it turned around and ripped against me. I had to take it off, and you could see this thing just went straight back up. But I made a big mistake. I should never have traded this stock, because on the 60-minute chart, and I told you guys this morning, you guys who were with us in chat, that linear regression channel, one of the linear regression channel lines was sitting right here. And damn if it didn't bounce off of that and rip it back up. Now ordinarily you get the volatility will drive it through enough for you to take profit, and then it'll come back. But days like today, where the market just wasn't clean, you have to respect that. So I never would have shorted into that linear regression channel on the 60-minute chart. You can see it held, it ripped back up, and so now I'm starting to trade to the long side. Okay, by now I've already been stopped out of SQ. So I run back to Facebook and I jump in. All right, you see, I'm like, okay, I'm in this thing now. Where am I going to manage my risk? How am I going to manage my risk? I just can't see it. It's all the way down here in support. So I jump in. It opens, it sells off. I stop out again at break even. It turns around and pushes up. Guess what I do? I jump back in it. When we broke the high, I jumped back in it when we took this high out. And next candle, pew, boom, another hit. So what do? I get mad when I start to see this thing rip. It sold off and it bounced and it started pushing up. I bought it. It went up and made a new high relative to this. I was feeling pretty good. And then all of a sudden, came all the way back. It tested the 9. So the 9 was was gonna be my guide here, because the 9, the 291.78 level, the pre-market high level, all of these were pretty much in the same. The 9 is what was gonna probably trail this up if it worked. So if I lost the 9, I don't care whether these levels held. I was gonna be done with it. But it held, and we made a nice move up. Got the first target. Put in another channel here, pull back, push back through, and I added. Okay, I don't typically add. You guys know I don't typically add, but this is a perfect place to add, because this is where you would buy. Okay, but when you add, you really can't make, or you really shouldn't make your stop break even. It doesn't work. So I got in and it turned around and stopped me out, and then started to move again. And again, I got in, it started to pull back, and I jumped out of it again. And I'm like, okay, this is ridiculous. Okay, this is completely ridiculous. You're trading like like you just started trading 2 weeks ago. Stop, get yourself in check. You buy it, and you just sit back and you let it work. You know the key levels. When you bought this, you know this was the level that you needed to let it test. Okay, you know it. So why didn't you let it test it? So I bought it and said, I'm not stopping out. I don't care what this does. I'm going to let it test. And then it hit the 297.37 level, pushed up, pulled back. Now I could have added back here, but I was like, no. 299 was the next target, and then my final target was 300. It ended up pulling back. I was letting it work while I went to pick my son up. It pulled back, stopped me out, and it was like, damn. So I turned around and bought it again. You might can't see the right here. I turned around and bought it again right here. And it just couldn't go. I shouldn't have bought this. Okay? What did I do? I bought it inside a channel. I anticipated a move or a test of this level again. And I said that when it tests this, if it failed and pulled back, I'd stop out at break even. But if it got to 300, that was my target. I got burned trading inside a channel. So I got stopped out here. Once we took out the 50, got back in, and just started nailing profit targets as we were coming down. Just, if I had just been patient and waited and stuck to my plan, stuck to my process, I would have had a hell of a lot better day. A hell of a lot better day. But I didn't. I just kept chasing my tail. If I was going to do this, then I should have scalped. And I would have made good money scalping. But I didn't. I screwed it up. And, kind of paid the price and didn't really make as much money today. So I ended up $97.72. All of this mess I did, that's all I ended up with. 24 tickets, $97.72. So not the way I wanted to start the week, but it could have been a hell of a lot worse. I could have never got my head screwed on straight and continued to trade like a dumbass and give money back. So, that was that. So I know we usually start out looking at the SPY, and you could see what I'm looking for. Today was a fairly decent day, but we're still under the 5-day. We're over the 10-day. We're over the 20-day, but we're still under the 5-day. We still have all of this resistance up here to deal with. This thing, when it gets over 393, it starts to run into all kind of crap. What did it got up to today? Almost 394. Almost 394. Ran into the 5-day, and we started to sell a little bit. Going into the close, we had a little sell-off. But VWAP held, and it's still holding. So tomorrow's going to be interesting to really see where we go. I mean, if we can claim the 5-day and start to push up, I think we'll be in good shape. But if not, the fear, this inflation fear might creep in, and we may start to come back. So I'm gonna be looking at this tomorrow and see if we're gonna hold over the 5-day and hold over the 20-day, and see if we can keep this thing going. All right, so last week, Thursday was a bad day. I mean, I wrecked myself Thursday, and I held, I can't remember what stock that was. Let me see if my brain works good enough for me to remember what stock it was I was trading. Was it FUTU? I think it was FUTU. I just held it. I was a bag holder, and thankfully, it did, come back to allow me to get out, for a smaller loss. I mean, I was in dire straits. It was in dire straits. I mean, I wasn't feeling well. This was the first day I had taken medicine that morning, and I was trading like crazy, but ended up 868.23. Had an okay day Friday, but not a bad week. I mean, we're not having a bad month. First week, this month we killed it. This quarter is gonna be bigger than the first half of the year from last year. So we're on a roll for this year. We are on a roll. Look at the equity curve. This is what we want to see. Of course, there are going to be bumps in the road. Of course. You see, this week we had a red week. The numbers went down. Last red week that I've had. But it's going to happen. You're going to have pullbacks. You're going to have days where you kind of trade sideways or just inch up, and then you start ripping. I don't care about profit when I'm growing my account. When you're growing your account, that's why I try so hard to keep you guys from focusing on profit. I'm trying to keep you guys to stop focusing on profit and focus on your equity curve. If your equity curve is going in the right direction, that means you're doing the right things. And you're not trying to compare how much money you're making to Tom, Dick, and Harry on YouTube or in the chat room or wherever. You're just focusing on the plots on your equity curve. And you're trying to keep that equity curve going in the right direction. Now you keep your head down and you work and you keep that equity curve going. You take a look at the numbers in 6 months and you will be shocked at where you are. I used to be frustrated, with 30, 40, $60, $70 profits here and there. But I stopped focusing on that. I started focusing on my equity curve. Making sure that it's going in the right direction. After about 6 months, it blew my mind how much money I had made. But all before, I was self-sabotaging myself by worrying about how much I'm making on each trade and how much I'm making each day. Doesn't matter. All that matters is if your equity curve is going up, that means you're putting money in your account. And give it some time, go back and look, you will be shocked. And you will have the motivation at that point to continue to do the right thing. All right, so that's going to wrap it up for me. I hope you guys, I know this was long today, but I'm sorry about that. Just break it up. But enjoy the rest of your day. Have a good night, and we'll get back at this in the morning.